Greetings all, Benny Reese West. It's going to take our weekly look at TLT and the rate market in general, and obviously there's been a fair bit happen this week. Mainly I would suggest centered around the quarterly refunding announcement. So what effectively has happened here is that Treasury are going to issue less debt at the longer end of the curve, so less 30 years and 10 years, and they're going to focus more on the short end of the curve. So that has basically just removed a whole heap of supply. Well, I wouldn't say a whole heap, but it's removed supply from the long end. So that, we've seen a pretty good reaction in the bonds on the back of that. So I think the question is this just an exercise in kicking the can down the road, or is it truly the bottom of or the top of the yields? Top of the rate cycle. Now, coupled with that, obviously today, Friday, or last night, my time, we had some data releases that are starting to point to a little bit of softness creeping in. So the one thing that I saw here, the average hourly earnings was slightly amiss. Non-farms was a little bit softer. The unemployment rate edged up just a little bit, and the services PMI was down slightly. So all that goes together to, certainly add a bid to bonds, because the expectation is now growing that the Fed's tightening cycle is, well, I would have said that it's on it's just about at its end anyway. I wouldn't say that cuts are imminent, but the market doesn't like no movements. They're either pricing in tightenings or they're pricing in cuts. So right now they're starting to rush to pricing cuts. So I'm not going to make any comment on what the Fed may or may not do in the future, but I think it's pretty fair to think at this point that their tightening cycle, maybe there's one more, but you'd have to think that if there was one more, then that would be it, and the chances that they are done are growing. So they have made a lot of noises about higher for longer, and they're going to be on hold for a while to get inflation and everything back to where they want. But there's also a lot of commentary around potential of a recession coming to a theatre near you soon. So remains to be seen. But I think that quarterly refunding has been probably the biggest driver of TLT this week. So let's just jump in and have a look at it technically. So the first thing that grabs me is the weekly volume. Massive. It's even beaten these other weeks where they were talking about record volume. So this is a record volume week for TLT. And there's obviously been a hell of a lot of buying going on in here, I would suggest, as people start to clamber on board and get on top of those aforementioned issues in terms of recessions and end of tightening cycles. But one swallow doesn't make a summer, so whilst it was a good week for sure, there needs to be a fair bit more to go. Now, this week's moves backed up what we've been talking about in terms of this great divergence that we've got coming in here to the RSI on a weekly. So, like I said, you even though it's been a great week, we've just got to, watch this. There's a couple of gaps here. These are daily gaps, so there's a couple of gaps here that we might come up and challenge. And then I would suggest that obviously this low here is probably somewhere where we need to get above. So whether or not this is going to end up being the ultimate low, I'm not prepared to stick a flag in the ground right now and say that was it, but certainly we're off to a good start here. So when I think about this on the bigger picture in an Ichimoku sense, we've come back to balance. I think that's all you could say at this point. There's a long way to go. But, I've said it before, I'd still be wanting price to get on the other side of the cloud, and there's a fair bit of time to go before that happens. But even before that happens, another warning sign that I would get or look for is a Kumo twist, so the cloud twisting. So what I would say is that the A span would get above the B span, sort of thing like that. So the cloud would twist and it would turn green. That would be a sign that enough's going on here to start to force what looks like a change of trend. And it's obviously been a big trend. We've got a fair bit of way to go yet, but this cloud twisting, and we're not there yet, this is going to take some time. This won't twist, I reckon, for another probably another month or two at least. And what we want to see is is this even come up here to hit the Kijinsen. If it can come up here and hit the Kijinsen, then maybe that's going to force the cloud twist, but we don't have that yet. So that's why I'm just saying, so I'm circumspect. I'm not calling this the ultimate low yet, but it's certainly a candidate. So just looking at this in a cyclical sense, this here, day 63, I think we've now got to call this the daily cycle low, because this move now is way too much to be anything other than the start of a new cycle. So I've got this penciled as an ICL at the moment, an intermediate cycle low, but what we need to see is to confirm this is an ICL. What we're looking for now is whenever this runs out of steam to come back, okay, and close below the 200-day moving average. Sorry, the 10-day moving average, I should say. So, this 10-day moving average will, obviously come up, but if we start to get something more like that's what I'm suggesting. So if we get that, we get a cycle that does not fail, which means it doesn't go below there, and then we start getting that, then we're coming back again. That's an ICL. Okay, and this would be daily cycle 1 of the new intermediate cycle going higher. So there's a little bit to go yet, but certainly we're off to a good start. So just in terms of immediate targets, these little gaps that have been left in the market would be your first point of call, but I think ultimately it's probably here that we want to get back through. I would think if we can start to come up through here and then start to trend, and we've just got the start of what looks like a trend going in here, then we start to challenge that cloud. All those other things that we talked about start to come to the fore, and we start coming back here going, yep, that looks like the ultimate low. It's a little bit, there's no smoking gun candle there, but it doesn't have to be. Like, a low doesn't have to be made by some sort of, outstanding candle. That can be quite innocuous. But at this stage, you've just got to deal with what's in front of you. And what I can see is this. So as we just sit here and now, you can make the case that you've got 1, 2, 3, 4, 5, and that we've got a completed, even though it's a little bit funky because of how the one wave is, but the point is that we can count 5 waves down here. So that this is definitely a candidate, definitely a strong candidate for a low. Okay, I think it's maybe a little bit more prevalent in the rate market. Sorry, when you look at the yields, which we'll look at in a second, but this is definitely a candidate. It's strong. Okay, now I'm on a weekly, so the weekly cycle look is the same. We want to get above the 10-week average here. Okay, if we start getting above there, then that consolidates even further that we've got an intermediate cycle low coming in here. And then that would lead us into the strong possibility that we had a yearly cycle low here, that we've got another yearly cycle low, a big low here. So, the ingredients are in place. For all those reasons, there are ingredients in place to suggest that this is going to be the big cycle low. But like I said, there's more water to go under the bridge for me to be able to declare this the absolute bottom. Like I said, there's definitely an argument to suggest that maybe Treasury are just kicking the can down the road, and then on the next quarterly refunding announcement that they read that the rates have come far enough that they can start issuing long end again, and that could make us go down further. I'm not predicting anything like that at this stage. All I can deal with is what I can see right now, and what I can see right now is a strong candidate here in TLT for a bottom. Now, last week's video, we identified the top of last week as a potential top in the yield, and I'll go through the same exercise. One of the telltale signs you can do is, if you're looking for the top of an impulse, is if you take a Fibonacci retracement and put the 38.2% right on the bottom of 4, often 5 will top out here and at 100%. We just shied away from it, which is just here at 5%, and we've had a very strong reaction in the yields this week. Okay, big bearish candle for the week. So you tie that all together, and yeah, this is starting to look like a great potential for a top in the yield, for now at least. And even just looking at this on a daily, you can just see that with this peak, we tried to come back, we failed, we tried to come back, lower high, and then bam, down we go. That has been what the market's basically done this week, and the RSI is now tailing right away, and I'm now looking for it to break 40 to make me think that this cycle is going to be a bit deeper than what we've any of the pullbacks that we've had recently. And so on a bigger picture, like I said, this is only a start. It's not a guaranteed slam dunk, but you would be thinking about now the market coming all. I mean, I don't know that I'm not sure that I can see the way things sit, and this is just an opinion rather than just reading the chart. I'm not sure I can fathom the 10-year yield coming all the way back to 2.6. I mean, nothing's impossible, and maybe the rate cuts are about to start, but I don't think they're that imminent. Or maybe into next year we'll see, but certainly for the moment, I can't see it coming back here as a new norm sort of thing. And I think that the ultra low rates are over, but I could be wrong about that. But I mean, put that aside. I'm not trying to deal with an opinion here as much as I'm just trying to deal with what I can see. And what we can see is a market that has just rolled over. We've taken out this low, even though we haven't been able to close below that. But I think that's a matter of time. And then you can just see the old peaks that come in here, that it will just be the next points of call as we start to meander back down. So that's kind of how we sit with the 10-year. And then the 30-year, which is probably more prevalent to TLT, is it's doing the same thing. We haven't actually been able to just break this little bottom here, but I would think that next week we will. That's how I would think. I mean, sans something else happening, but it just as it sits here and now, it still looks like a swing fail where it's just coming down. It's just, that's the only way you can read it. We just take this top out. The RSI is not below 40 as yet. It's around about there, but if this starts to come down here, then we can expect a more prolonged move down, I think. So how far down, I don't know. I'm not going to try to predict that, but just as I sit with 30 year, this is going to be very supportive for TLT prices. And even just in here looking at the 10-year note future, I mean, you can see how far it's moved, because last week we were talking about how it's just bouncing around in here, and it failed to get back down here, and then it's broken through. And it's taken out this little zone, but it's come right up into test this stuff here. So I do expect that next week, I just think that this will probably come up, and the next point of call will be to challenge, this stuff up here. At the very least, I think that will be the next. Once we've defeated this area, which is still in play for me, but the cycles have turned on the bonds now, and we are starting to run. So I think these bond prices will head up. I mean, whether or not we can get up here next week, I don't know, but I wouldn't be backing against it. I think we're pretty set on. I mean, it's been a steep run. There will be some sort of pullback, but now, of course, the pullbacks are just about looking at areas where the market paused before, and can we find somewhere to get long price in here? That would be how I'd be looking at it, and certainly how I'll be trading it next week. It's tough to. It can be tough to buy in when it's running like this, and for me, I just like to see retracement and then back to areas that have been respected, potentially that far, I'm not sure, and then try to get longs again to retest back up into these sort of zones. So that's just how I'd be approaching the futures in a trading sense next week. But one thing we can see here when we just come over to the 2-year yield, and we highlighted this wedge that was going on, I think maybe when we're at this point, I thought we were going to break. We just had one more test up here, but now we've had a pretty heavy week down. So it's interesting, because even though the quarterly refunding was less than what the market was expecting, but it is further up the curve. But the 2-year yield hasn't really worried about that, because I think it is now more in rate cut mode. So the way I'd read this is usually, as I was saying before, the market doesn't like to price no movement. It likes to price either a hike or a cut. So now it's going to get busy in trying to price a cut. At some stage, this will overprice a cut, and something else, maybe a strong CPI, or the Fed will probe the market again, saying we're not quite done, and we'll bounce back. That would be how I would think it's going to play out. But certainly now that we've broken through this wedge, Whether or not we just come and test it like that, I don't know. But now that we've broken through here, I think this is the market starting to tell us that, we are now really starting to price in the possibility of rate cuts. So once again, even though this front part of the curve's not as important for TLT, it's certainly supportive of price. And so that leads me to think about the 2s, 10s curve. And obviously because of that quarterly refunding, it's now starting to flatten a little bit. So we never got back to evens. I think we'll get there eventually. But we did sort of have a poke through this area. But maybe now we just come back because we are hot. So maybe we just come back to test the 10 cants and the fast line here on the edge of the cloud before we move higher. So even though the movements this week have made me think, that is flattening for the curve, I still think the curve overall is going to head higher. I think the 2-year yields are going to fall further than the 10-year yields, which would probably steepen that curve up. But just technically, even though it's a little bit fluky with this sort of stuff, I don't know if we can flatten this far. So maybe that means the curve's going to, keep steepening out here past parity, past zero, before we get some sort of retracement. But I'm not really looking at retracements at this stage, other than to say that we're a little bit high. We're not super duper high. We're still in the process of going higher. But I just think that this week with those 10-year yields, that the longer end of the curve getting less supply is flattening for the curve. But I think the general picture of rate cuts coming is still in place. So we'll see how this plays out. But as long as we remain above that cloud, I think we're all good. So really, that's how we sit with TLT and the rates at this stage. We've got a good week. We've got a good start. That is all I would say about this at the moment. We've got a good start. We need a little bit more. This 10-week moving average will be a good indicator that we can get above here, as I've said before. But at this stage, I certainly wouldn't be looking to sell this. If you've been long and you've ridden all the pain, or if you just got long, then congrats. I think you're in a pretty good spot. If you've been long and held the pain, I think maybe that there's light at the end of the tunnel now. If you got stopped out or if you lost money, I'm sorry about that. That's just the way the market works. But maybe if you're brave enough, it's a chance to get back into to recoup some. But I'll leave that up to you. I'm not trying to provide any sort of investment advice. This is just what I can see, and I think the overlying thing, the takeaway, is that this is a strong candidate to be a major low. So we'll see what happens into next week and over the coming weeks. But as we sit, I'm not prepared to say this is the low, but I am prepared to say it's a very strong candidate at this stage. Thanks to everyone who's been liking and subscribing. Don't forget to hit those buttons. Gives me a help. And we'll see you next time. Bye for now.